Texas Instruments is trading at 172.48 and has largely been trading sideways from its all-time high set in 2021 and is currently down around 8% from that time. Analysts are pointing to an average $169 price target 1 year from now, which is around a 2% downside from where it sits today. Now, obviously, Texas Instruments has a long and very impressive history as a dividend stock, but people seem to be wondering, where does it go from here? As it stands, they have a 3% dividend ratio, which is good. One thing I see that is interesting is their annual revenue and net income has actually decreased last year in 2023, something they attribute to near-term demand decreases. However, long-term, 2026, they anticipate this demand to continue growing steadily and increase, something analysts have picked up on, offering an EPS projection of 9.4 for December 2027, which is 35% higher than today's EPS of 7.01. This could explain why there are multiple institutional investors starting to pick up shares, probably looking to capitalize on the near-term revenue decreases so that they can hold until demand picks up again as is forecasted. The balance sheet is looking very healthy. Debt to equity is not too bad at 0.66. I've done a little bit of research, and there are only 6 semiconductor companies offering dividends above 3% right now, meaning Texas Instruments is the 6th largest dividend payout in the industry, and of the top 6, only 3 others have a long history of sustainable dividend payments. Texas Instruments' PE ratio is 24.45 compared to the industry average of 62.1, so it does lag the industry in terms of valuation, but one huge caveat there is the industry is currently filled with a lot of companies in their growth phase, and there is a ton of hype and attention in the space right now, which is pushing valuations into the stratosphere. This is not a big concern for Texas Instruments because, like I said, they're a much more mature player offering good dividends, and their valuation is much more in line with the overall market, with the S&P 500's valuation of 23.27. The only real risk I see is in the event of a market correction in regards to the valuations of the semiconductor industry, where if the valuations were to start coming back down to earth, then TXN could get caught up in it. But honestly, if this were to happen and it were to affect TXN stock, because it's so in line with the S&P 500 and the market itself, I think that risk is pretty mitigated, and it's not likely to cause any serious price corrections because it's reasonably valued relative to market. Plus, the semiconductor industry is forecasted to grow at a compound annual growth rate of 12.2% from now until 2029. So overall, I think the future growth opportunities in the semiconductor space, in combination with Texas Instruments' great fundamentals, make this a solid dividend pick.